Welcome to Flash Core, your sharpest source for daily headlines and deep dives. If you're new here, don't forget to hit that subscribe button and stay ahead of the curve. Alright, let's get after it. The world's economic map is quietly being redrawn. Not with headlines, but with trade deals and shifting supply chains. The US, long the center of global commerce, is seeing its closest allies and competitors look north, to Canada. Canada, once the unassuming neighbor, is now a magnet for partnerships that used to be ours. This isn't about a single deal, it's a trend that raises tough questions for the US. Are we losing our edge? Are our policies making us less reliable? Today we'll break down 11 countries shifting trade from the US to Canada, and what that means for American jobs and influence. Let's face the facts. Our place in the global economy is changing, and we need to understand why. Let's start at our own border, Mexico. For decades, NAFTA and now USMCA tied us together, but Mexico is increasingly looking to Canada for stability. Political whiplash and tariff threats from Washington have pushed Mexican businesses to diversify. Canada offers predictability, leading to a surge in Canada-Mexico trade. Key sectors, auto parts, agriculture, manufacturing, are seeing more deals bypass the US. Canadian investment in Mexico is booming, especially in energy and aerospace. Every container rerouted north is a missed opportunity for the US. The shift is real, and it's accelerating. Now let's talk about China. US-China tensions and trade wars have made American markets unpredictable for Chinese businesses. Canada is quietly positioning itself as the North American gateway for Chinese goods and investment. The Port of Vancouver is booming as Chinese companies seek stability and fewer political risks. When China slapped tariffs on US soybeans and pork, Canadian farmers stepped in and captured the market. Canada's CPTPP membership gives it a strategic edge, especially after the US walked away. Now China is applying to join the CPTPP, which could deepen Canada-China ties. For every US company hurt by tariffs, a Canadian competitor is seizing the opportunity. We chose confrontation, Canada chose opportunity. Across the Atlantic, the UK's post-Brexit hopes for a big US trade deal have stalled. Instead, Britain turned to Canada, a trusted Commonwealth partner, for a swift, tariff-free agreement. The UK-Canada Trade Continuity Agreement was negotiated quickly, in stark contrast to drawn-out US talks. The UK has also joined the CPTPP with Canada as a key partner. This gives Britain access to a major Pacific trade bloc, reducing reliance on the US. UK exports to Canada, cars, spirits, financial services, are rising. British companies see Canada as a stable entry point to North America, bypassing US volatility. Canada offered certainty and speed, the US offered ambiguity. For the UK, Canada is now a more reliable, pragmatic partner. Every pound of trade flowing to Canada is a reminder that the special relationship can't be taken for granted. The post-Brexit American trade bonanza never materialized. Canada stepped up and delivered. The shift is clear, and it's growing. Germany, Europe's economic powerhouse, has long relied on the US market. But America First rhetoric and tariff threats have shaken German confidence. German industry values stability, and is now looking to Canada. The CETA agreement between Canada and the EU eliminated tariffs and opened new doors. German exporters find Canada a drama-free, open market. As Germany seeks new energy partners, it signed a major hydrogen accord with Canada. German companies are investing in Canadian factories and research centers drawn by stability and USMCA access. For German CEOs, Canada is a safer bet than the unpredictable US. Germany is diversifying, strengthening ties with a like-minded G7 partner. Canada is becoming Germany's preferred North American alternative. This shift has real consequences for American industry. The US is no longer the only game in town. Now Japan. The US-Japan alliance has been strong, but Japan values predictability, and US trade policy has been anything but. The US withdrawal from the TPP left Japan searching for new partners. Japan and Canada co-led the creation of the CPTPP, forging a deep new bond. Under the CPTPP, Japanese goods get preferential access to Canada, and Canadian farmers are gaining market share in Japan. US producers left out face higher tariffs and lost opportunities. Japanese companies are investing billions in Canadian energy and technology. Canada is now a key part of Japan's long-term strategy. By stepping away from the TPP, the US opened the door for a flourishing Japan-Canada economic axis. The US is now on the outside looking in. This is a direct result of our choices. The partnership is deepening. Without us, the consequences are real. Let's talk South Korea. Despite close US ties, Korean companies are hedging their bets. The Canada-Korea Free Trade Agreement eliminated tariffs and opened new opportunities. The electric vehicle battery sector is the clearest example. Korean giants are building gigafactories in Canada, not just the US. Canada offers critical minerals, clean energy, and policy stability. Korean firms see Canada as a foundation for their North American strategy. They're de-risking supply chains and avoiding US political uncertainty. Canada is now a primary destination for Korean investment. For every battery plant in Ontario instead of Ohio, it's a win for Canada. The US can't assume it will always attract the industries of the future. France and the US have a long, sometimes rocky alliance. Political friction has led French businesses to seek more compatible partners, and they're finding one in Canada. The CETA deal has boosted French exports of luxury goods, wine, and aerospace to Canada. French tech startups are choosing Montreal as their North American base, drawn by its bilingual culture and thriving AI scene. Canada offers a collaborative, less cutthroat environment than Silicon Valley. France and Canada align on climate, multilateralism, and global cooperation. This shared worldview builds trust and deeper economic ties. France is consciously deepening engagement with Canada for stability and growth. For French businesses, Canada means opportunity without the political headaches. The momentum is shifting north. Brazil, Latin America's largest economy, has had a turbulent relationship with the US. Brazilian agribusiness needs reliable markets, and Canada is stepping up. The two countries are negotiating a free trade deal with Mercosur, encouraging stronger ties. Canada buys Brazilian agricultural products and exports crucial technology and fertilizer in return. Canadian investment in Brazil, especially in mining and infrastructure, is welcomed as stable long-term capital. Canada is seen as an honest broker, free of the baggage the US carries in Latin America. Brazil is diversifying away from over-reliance on the US and China. Canada is becoming a cornerstone of that strategy. As the Mercosur deal progresses, trade will keep shifting north. Billions in future deals may bypass the US. India, the world's most populous country and a rising economic superpower. US-India trade talks have been slow and contentious. Meanwhile, Canada and India are close to signing a breakthrough trade agreement. The Indo-Canadian diaspora and economic logic are driving this partnership. India needs Canadian resources. Canada wants access to India's vast market. Canadian pension funds are investing billions in Indian infrastructure and tech. Canada is moving faster and more nimbly than the US. Ottawa and New Delhi are signing deals while Washington lags. Canada is poised to gain a first-mover advantage in one of the world's most important markets. Australia, one of America's closest allies, is also hedging its bets. Australia and Canada, both CPTPP leaders, are deepening economic integration. The trade pact opens new markets for both, providing a counterbalance to reliance on bigger economies. After facing economic coercion from China, Australia is diversifying, and Canada is a safe, stable partner. They're collaborating on critical minerals and clean energy, building secure supply chains. Even our closest friends are building new webs of relationships. The Canada-Australia partnership is growing in strategic importance. The US alliance remains strong, but economic energy is shifting elsewhere. This is a subtle but crucial change. We can't afford to ignore it. Saudi Arabia, long tied to the US by oil and security, is diversifying its economy and partnerships. Canada is emerging as a key destination for Saudi investment, especially through the Public Investment Fund. The trade relationship is shifting from oil to technology, engineering, and education. Canadian firms are winning major contracts in the kingdom. Canada has become the top supplier of barley to Saudi Arabia, a multi-billion-dollar win for Canadian farmers. Saudi Arabia is pursuing a more independent economic policy, building ties with Canada and others. Canada is seen as a stable G7 partner and a safe place to invest. American firms now face tougher competition for Saudi capital and contracts. The old certainties are fading. The US is no longer Saudi Arabia's only major partner. So, what have we learned? The world isn't waiting for the US. Countries are making pragmatic choices, and many are turning to Canada for stability and opportunity. Canada is signing the deals we abandoned and attracting the investment we took for granted. This isn't about American decline, but it is a wake-up call. Our economic dominance is eroding slowly but surely. We need to ask why and what we can do to regain our edge. Let us know your thoughts in the comments, and subscribe for more deep dives from FlashCore. We'll see you next time.